This episode of My Two Satoshis is brought to you by BitGet.com. BitGet is one of the fastest growing derivatives exchanges with 1.5 million users worldwide. Available to U.S. citizens, BitGet offers USDT margin trading and one-click copy trading. With over $5.6 billion in trading volume per day, you should start trading with the fifth largest global crypto exchange today. BitGet.com. Link in the description below.
This my two Satoshis. This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah, this.
It's your boy Crypto Blood, and welcome to another My Two Satoshis crypto news video. Today we are looking at something that is going to impact the crypto markets, but it's not directly related to the crypto markets. And this is why you need to follow people who look at this crypto space, because there are external variables that really affect what goes on speculatively in the crypto markets. Crypto markets are highly speculative now. A lot of what people trade and go in and out of have really nothing to do with fundamentals, and it's more so a speculative atmosphere at this point. Will that change in the future? I think so, as this whole space matures. But as of right now, things like what the Fed does, monetary policy, will impact, even fiscal policy will impact cryptocurrency. So in today's episode, we're looking at what the Fed said this past week in regards to their tapering of the money printing. It looks like they're going to taper that program, or the many programs they've implemented over the past few years and increased since the pandemic. Really, they ramped up heavily since the pandemic. They use that as an excuse, but we're going to take a look at what they're now pivoting and deciding to do will greatly impact cryptocurrencies, and it may indicate a top in the markets short term. If this is true, if they stick by their word, because they've backtracked in the past, but if they stick by their word, this top will be present in equities as well as bonds. So we're going to take a look at this out of CoinDesk today. Federal Reserve to taper money printing that fueled Bitcoin bets. Not only Bitcoin bets, but equities, bonds, everything. It's just basically a everything bubble going on right now. A term coined by Graham Summers. If you haven't heard that book or read it, definitely go check it out. The Everything Bubble, the end game for central bank policy. It was actually made back in 2017, but this is what we're going through right now. This is why you're seeing, and this is great to be in cryptocurrencies, because you've benefited from the central bank policies that they've been implementing over the past 10 years, or since 2008, to be honest with you. But what happens when things reverse or change course? They take that money away. One could say and argue, hey, I don't believe they're going to take it away. I don't believe they can sustain with a taper of their policy of money printing. That is one argument, and you may have some validity there. However, on the other hand, if they're forced to, because of other circumstances, they're forced to taper, increase in inflation, start seeing these actions that they've taken show up in consumer prices, then that is a whole different ball game. So they may be forced to taper, and that is the only scenario I see that would make them stay on a taper course. So we'll have to see what happens, but we'll definitely talk about that today. And it's something that you need to be aware of in these markets. Another example of this crazy money printing and easy money that's been circulating around is the fact that you have stuff like this. A little known cryptocurrency spikes 400% solely off the change in name from Facebook to Meta that they're doing. So they're talking about Mana. We talked about Decentraland the other day in a video. These are the things that are happening. Actually, there are other smaller coins that have gone up even more than Decentraland, and it's all because there's just so much money being sloshed around that people need places to speculate and put this money. It's a chase for yield, and so that's what we're seeing right now. And one other subject we'll talk about and touch on today, and I want to get your feedback on it. My Bitcoin maximalists are going to hate this for sure. JP Morgan says Ethereum is a better bet than Bitcoin as interest rates rise due to the DeFi boom. This plays into a taper. If the Fed decides to taper, it will affect interest rates, but it will affect them to the downside. So if they begin to taper, that means interest rates should go higher. But if interest rates go higher in the traditional markets, that means the interest rates are going to go even higher in this new world of DeFi. So we'll take a look at this article out of Market Insiders, and I want to get your feedback on it. Do you think Ethereum is a better bet than Bitcoin? It's been outperforming Bitcoin. I think it will continue to outperform Bitcoin. Is the Ether token itself going to be utilized in this Ethereum 2.0 blockchain proof of stake system like they're intending it to be? I'm still not convinced that Ethereum 2.0 is going to be the solution, or the solution fast enough for a scalable smart contract blockchain. On the speculative side, on the financialization side of things, Ethereum is definitely being picked up by Wall Street. ETFs are adding them on a regular basis, and I just heard that Bakkt, remember Bakkt, BAKKT, they've added Ethereum to their services. So Ethereum is definitely ripe to continue to outperform Bitcoin. It just is what it is, ladies and gentlemen. Even though it's not the fastest thing out there, it is definitely faster than Bitcoin. They have their issues as well, Ethereum does, as far as gas fees and stuff. But let me know your thoughts in the comments and we'll talk about that. But all three articles are coming up on today's episode of My Two Satoshis. Let's get it. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. Let's take a look at the heat map. We've got Bitcoin down 0.5%. It's trading right around $61,000, $60,920 to be exact. What does this mean? You know, Bitcoin is down. A lot of the altcoins are up today. There is a reason I think we're seeing the decoupling on today's trading day. We have expirations of options going on Bitcoin today, November 5th, and that is a big move because the expiration, or those strike price, it needs to be above $62,000 for the bulls, below $62,000 for the bears, for some rebalancing to happen. And so far, I mean, it's kind of right in the middle. 61,000 is kind of close, and we can see a spike of 1,000 no problem at the end of the day. We'll see what happens, but that is what's going on in the markets and why we're seeing a battle go on between Bitcoin bulls and bears. BNB is up heavy today. It is up 11%. Wow. Hex is up great today. Shiba, nice bounce back. If you bought on that low, it was down like 19% the other day. That would have been a nice move for you because it is currently up 15%. So that's a huge swing. But in regards to Bitcoin, as you guys can see, the yellow line has been breached. We did see a bounce off that purple line, almost off the top side of that purple line. But at this point, this is not looking good for Bitcoin because the trend line, overall trend line, short-term trend line has been breached. That yellow line has been breached, ladies and gentlemen. So I'm thinking we're going to test the top side of that purple line, which takes us around $60,000 Bitcoin, $59,000 Bitcoin, somewhere in that region. Technically not looking great in the short run with Bitcoin. Just a heads up. So maybe move to the side or position yourself better to take advantage of a move down to buy dollar cost average in at a lower price. Let's talk about the Federal Reserve, ladies and gentlemen. This is a topic that you know, again, a lot of the crypto influencers, if you want to call them, aren't paying attention to. This is very important. This is a macro event that will have major impacts across all asset classes. So we're seeing that $120 million, or billion, I should say, of monthly bond purchasing has provided a tailwind for Bitcoin and other asset classes as investors see the cryptocurrency as a hedge against dollar debasement in the face of ultra loose monetary policy. So the plan is for the Federal Reserve to taper its $120 billion a month purchases, taking the first step toward winding down a post-corona money printing program that has inspired many investors to buy Bitcoin as a hedge against inflation, as well as stocks. I have to put that in there. Bonds as well. People are buying bonds. The Fed said Wednesday in a statement that it will reduce the pace of its asset purchases by $15 billion a month starting this month. Purchases of U.S. Treasury will drop to $70 billion a month from $80 billion, while purchases of government-backed mortgage securities will decline to $35 billion a month from $40 billion. So it's a small step. That's why you haven't really seen the impact yet. But if they continue on the path of tapering, bringing that, you know, that amount down every month, they continue to do that, which is the path they're going. They tried this before, you know, and the markets had what was called a taper tantrum, and they had to reverse course. So will they do that again? This is what maybe many are betting will happen. But again, this time may be different, because if interest rates start to really spike, you start to see prices, consumer prices spike, then they are forced to taper. They cannot continue this easy money. They will need to pull back, and the markets will force their hand. So we'll see what happens. But under the plan, the Fed will continue to wind down its purchases by $15 billion every month until the program concludes during the middle of next year. So this is the timeline, and why I'm saying it's not going to happen right away, but you should start to think by middle of next year, 2022, maybe a top in the market. Will that coincide with $100,000 Bitcoin? Maybe, maybe not. I don't know where Bitcoin will be by the middle of next year, but I will tell you this: start taking profits. Why not? Start moving money to the sidelines and looking to, maybe dollar cost average in at a lower price if you're an active trader. Another thing to keep in mind is that the central banks did leave the interest rates unchanged, okay, but a growing number of analysts in the traditional markets are predicting that the Fed might have to start hiking the benchmark rate to tamp down inflation at a time when U.S. consumer prices are rising at a clip not seen on a sustained basis in 3 decades. Anyone remember Paul Volcker? He came in and did a great job by slashing things and getting things back in order. Interest rates were 17%. We could never have interest rates that high in this current environment with the type of debt we are carrying. So this is why I'm saying that it's a double whammy for the Federal Reserve. They're stuck in the corner. Interest rates might spike. Consumer prices are spiking. They may have to start increasing the interest rates in addition to tapering, stopping the money printing. So I'm not saying that the top is today, but the top could be 2 months from now, 3 months from now. But why not be prepared is all I'm saying. And I think you should be looking at things like the tapering of the easy money printing and the bond purchasing that the Fed has been doing really since, I want to say like 2011 or something like that. They've just ramped up on it during the pandemic, and they've used that as another excuse to continue the program. But you should definitely keep these types of things in mind and keep a pulse on that, because you're going to continue to see one indication of these loose policies, monetary policies, and easy money printing is things like this, where you see cryptocurrencies going up 400% just because of a Facebook name change that has a relation to what that cryptocurrency is doing. Also, Shiba Inus, the Doge coins, Robinhood, the AMCs, all of these crazy moves up in stocks and cryptos are all because of the money printing. So believe those winnings, those gains will come to a screeching halt if they actually are forced to, because they don't want to. They want to keep this going, this illusion going. We all know that. But if they're forced to stop, then all of the party is going to stop. The merry-go-round is going to stop. So you better be in cash to be able to take advantage of these depressed and lower prices you're going to see in stocks and bonds and cryptos and real estate, you name it. Lastly, I just want to take a quick look at JP Morgan's stance on Ethereum, saying it is a better bet than Bitcoin. I surprisingly may have to agree with them. JP Morgan is saying that crypto investors should hold Ethereum rather than Bitcoin in an era of rising interest rates. Ethereum, they say, is at the heart of decentralized finance and the market for non-fungible tokens to booming areas. So Bitcoin is more akin to digital gold, which is likely to fare less well as interest rates and bond yields rise. This is exactly what I just talked about in the last article. Interest rates rising, bond yields rising. That's a correlation with the Federal Reserve stopping the money printing. A direct correlation. So I agree with them on that. JP Morgan analysts said that in a recent report that rising interest rates could pose a problem for Bitcoin, just as they do traditionally for gold. And I do view gold or Bitcoin as a digital gold, exactly what Bitcoin serves its purpose as. The Bank of England on Thursday said interest rates would rise or have to rise over the coming months. Federal Reserve on Wednesday cut back its $120 billion month of bond purchasing. So we're seeing the central banks around the globe really take this move. They've got to. their hand is shown. They've got to make this move. So this is interesting. Let me know, what do you think? Do you think Ethereum is going to continue to outperform in this market? So it could be a situation where, you know, at the beginning I said is a top end for cryptos. Maybe it's not about a top end for cryptos, but more so it's a top end for Bitcoin. What they're saying here is that Ethereum and tokens like Ethereum that have DeFi or NFT markets that are booming and growing, maybe they will continue to rise even with fundamental changes from the Fed affecting Bitcoin. Let me know in the comments below. I would love to know what you think about that. And definitely make sure you like, share, and subscribe to the channel. That is greatly appreciated. That's my 2 Satoshis for today. It's your boy Crypto Blood. I'm out of here. Holla!